The strategy that I'm about to show you in this video is by far one of the most accurate strategies that you ever see anywhere on the internet. I actually think that Deriv might actually ban me for showing you this type of strategies. Okay, let's get started. So with this strategy, we are going to combine three things, right? The first one is the Bollinger Bands. The Bollinger Bands is one of the most used indicators in the market, and it is because traders believe that prices spends 90% of the time inside the Bollinger Bands. If you look at it, you are going to see that prices always move inside the Bollinger Bands, right? So some other traders, they have a strategy which says when the market touches the lower side of the Bollinger Bands, you just have to buy and expect price to move back into the middle band, right? Okay, this was a very good strategy, but the problem with this strategy is the risk to reward ratio. Because let's say you buy at this point here, when the market started touching the bands here, you are expecting prices to go to the middle band, which happens at this point right here. So it happens at this point here. But where are you putting your stop loss? Because from this point to this point, it's just a few pips, but maybe you want to put your stop loss away from the entry, because when the market touches one of these bands here, the lower band or the upper band, it shows a lot of momentum. So the market will not reverse right away. If you look at this, you can see that the market will not reverse right away. It will move and then reverse later on sometimes. So to avoid this, we are going to put another indicator, which is the MACD. So the MACD is down below here, but as you can see, we don't have the line here. On the MACD, we just want to use the histogram. So this histogram here, what is gonna do here, it is gonna show us what is called divergence. So let me explain to you what divergence is. There are two types of divergences, right? The number one is called negative divergence. The second one is called positive divergence. So let me show you what negative divergence is and what positive divergence is. So negative divergence is when you have the market making a lower low, showing that it's continuing going down, which happens from this point here. You can see that this second point here is lower than this first point here. You might not really see that, but if I extend this, you can see that we are moving down at this point here. But if you go to the MACD histogram, you can see that this point right here is right here, and then this point right here is this one right here. So this one and this one, you can see that the price is the MACD is moving up, but the price is still moving down. And what this shows us is, it shows us that the MACD is already showing loss of momentum in this market, but the price haven't showed loss of momentum. So this is where you want to be. This is the things that you want to be looking at. So let me show you the positive divergence, then I will show you when to enter this market, right? So the positive divergence works like this. We have the market making a higher high right here. From this point to this point, the market is going up. But if you look at our MACD, you can see that the price is already showing that it's losing momentum. So this one is going up and this one is going down. So we are looking at this point and this point. And on the price, we are looking at this point and this point, right? So this is called divergence, right? So many traders might already know this. So let me show you when do you buy and when do you sell, right? So for you to buy in this, right, first thing, you want to insert the Bollinger Bands. So to insert the Bollinger Bands, just go to the charts and insert the Bollinger Bands. Here are the properties. You put period 21 and deviation to 2.00, right? So on default, it's like 1.5. So don't leave it on default. Put it on 2.00 and then you click OK. So once you do that, you are going to see the Bollinger Bands put on your chart like this. And then you also go to indicators, go to the MACD. And on the MACD, what you are going to do here is you are going to put period first 12, slow 26 and MACD 9. So this is the default, right? And then you can just click reset like this, but I just want to change my colors to blue and then I will put the signal to none, right? So don't put the signal line, right? Just put it to none, because you just need the histogram. So the histogram will look like this, right? So let me increase the size here. So the histogram will look like this, right? So now for you to enter into this market, here's what you need to see. You need to see the market which is creating a lower low like this. Let's say you want to, for you to buy, you want to see the market which is creating a lower low like this, and then you want to see the market also creating a lower high on the MACD like this, right? The higher low. So this is called the higher low or lower high, I don't remember. Okay, so like this, if you look at this, right, and then but for you to enter, you want to see this happening, and then the market being touching the Bollinger Bands, right? So once this happen, and then the market touches the Bollinger Bands on the price action on this second lower low here, you want to be buying at this point. And then if you buy here, you buy here, you take profits when the market touches your middle band, right? So just drag the crosshair here, drag from here, and then you want to measure 2830 here. So that's how you enter this market. So for the stop loss, you just want to make sure that your stop loss is not too close to the entry point, right? You can use the ATR here. So it's 283 pips, right? So this is volatility 75, by the way. So make sure you are using the smallest lot size or when you are trading volatility 75. So just make sure your stop loss is not too close to the entry, right? So here's another example. Here we have the market making a lower low here. We have the market making a lower low here, but the MACD is making a higher high, right? So it will take time for you to be able to draw this, but you need practice. But if you extend it, right, you can extend it, because if your line is too short, you might not know what is happening. But if you extend it, you can see that this market is moving to the upside, right? And this happens when the market touches the bands here. So once the market touches the bands here, you are just buying, because now you have seen the divergence happening on this point here. On this point, we are seeing a higher high, a lower high, and then here you are seeing a lower low. So here, when the market touches the bands when the divergence happens, if it happens when the market touches the lower band, then you buy at this point here. So I hope you are understanding what I'm talking about. You see the market making a higher high, and then here you see the market making moving to the downside here. So the market is going down, the MACD is going down, but the market is going up here. So once you see this touch here, once this touch happens, you are selling at this point, because now we have the divergence to confirm with our Bollinger Bands, right? We're going to see a lot of examples here. We are going to see a lot of examples here. You can see here the market is created a higher high, but at the same time the MACD is creating a lower low. Here you can see this when the market touches the upper band for the second time here, you can see that the MACD was lower than the first point here. So this point here was lower. So we at this point, once the market starts touching, right, you know that there's likelihood for the market to reverse very soon. So you want to be entering your sell positions so that you can be selling, right? We can go over and over and over again, right? So what you need to do is go ahead and test this strategy, right? So I was testing this strategy, and I think it's one of the best strategies that will ever come out on volatility 75 index, right? You can see another example here. If you want to really make money, you need to go ahead and test out these strategies, and then you start trading on your own. So thank you for watching this video. If this video was interesting to you, make sure to click that like button, and I'm going to see you in the next one.